right, welcome back. We're here at the IPRG Roundtable, and the topic today is getting to the closing table in today's environment. So let's just take a step back and see where we're at. It's the middle of October, and we're talking about getting the buyer to the closing table in today's environment. So why is today's environment a challenge? We have a rising interest rate environment, and we have potential changes in the regulatory environment, which is just causing a lot of uncertainty, and people don't know what that's going to look like. And uncertainty creates, it causes people to pause and not act because they don't have clarity of information. So, to dive into this a little further, at the end of September, the Fed raised the Fed funds rate 75 basis points. So we have rising interest rates. That's going to have an impact on the ability for someone to get financing, especially if you look at a debt coverage ratio analysis. The higher interest rate just simply means there's less financing available. So this is the environment we're in. And we want to make sure that buyers close, that they're not just signing contracts, or they're not just looking at listings. We want to get to the closing table.
Yeah.
So are we seeing any issues with getting to the closing table, and how do we overcome the issues so that we can represent our sellers and get deals closed?
Yeah, I'll start it off. I think you make a lot of good points, and obviously we're starting to deal with this in the market, and it's not just us. Obviously, we have a lot of colleagues in the market that are starting to talk about it. And Derek, you made a couple of good points. Obviously, interest rates are going up. Buyers put deals under contract. A lot of them before the interest rates going up. A lot of banks didn't honor rate locks. They didn't have a rate lock at LOI. They're waiting for a commitment to rate lock, which a lot of these buyers didn't have in time.
Can we talk about that for a minute?
Yeah, go ahead.
All right. So you're saying banks aren't honoring rate locks or aren't providing rate locks. So
Yeah.
Buyers are signing contracts when they anticipate they're going to get some amount of financing, but they don't know what that's going to look like. And then they sign a hard contract. They put down a deposit. Are these contracts subject to financing, or are they not contingent?
So these contracts especially the contracts that we're a part of, are not contingent on financing. But to answer your first question, a lot of these deals, they went under contract without rate locks. I think these buyers, called their brokers, called their banks. They got an LOI for the transaction, but a lot of banks didn't rate lock at LOI. They rate lock at commitment, which is a process. Obviously, anyone listening to this podcast is probably aware of this, but you sign an LOI, you put down a down payment, and the commitment comes after the appraisal. It could take a month. It could take a month and a half. And if they're not rate locking until commitment, you're open to some serious fluctuation in the interest rates. And I think that happened to people that locked up deals under contract, and now they're scrambling. They're either going to have to, one, honor the contract and be gentlemen and do it, or they're going to have to do some sort of reach-rate on the price, or they're going to have to come up with a lot more cash to close the deal. So we're dealing with that, and it's really important that when you sell a deal today, you're going under contract with the right buyer, a buyer that's going to perform. And I honestly think terms over price today. I think terms are more important than the price, which is crazy to say. But
honor the contract.
Yeah.
But what are we talking about here? I mean, a buyer is signing a contract, right? They're putting down a deposit at contract signing.
Yep.
What do you mean honor the contract?
I mean sign the contract and close on the deal in which the terms work.
But can't the seller just sue the buyer if the buyer's not performing and then take the deposit?
I think we all know how that looks.
Okay.
I wish it was more straightforward.
Why don't you elaborate?
In New York, I mean, there's a lot of give. I mean, obviously, unless there's time of the essence language in the contract, there's a 30-day grace after closing period. But it's also like people understand that if they don't close, obviously the seller is going to file a list pendants, but it's going to be in court for years, and a seller doesn't want that, and a buyer doesn't want that. So there's a good shot if the buyer plays his cards right in New York City that he can wait out a seller and push some term, which...
Isn't it in the seller's... And I'm just speaking to analyze this fully, but conceptually, shouldn't it be in the seller's interest that if the buyer can't perform and doesn't close, that the seller gets to retain the contract deposit and can then go back to market and resell the deal? So in theory, in this analysis, if they're getting 100% value at the time of sale, and there's a 10% deposit, the buyer doesn't perform, they get to keep the 10% deposit, then they can go back and resell the property and get 100% value from the market again, so they end up making more money because the buyer didn't perform.
In theory, absolutely, but that's in theory, and we all know, everyone at this table, that that's not going to happen. A buyer's not just going to willingly give up his or her deposit. He's going to put a less penance on it, blame it on something, and attempt to tie up the seller in some litigation. And every party knows, or the two parties know, that it's going to take time, and a lot of people don't have time. So it's a card which I'm not saying they're going to win, but it's a card they're going to play. I haven't seen. I mean, I've seen.
You know what the real issue is?
What?
The real issue is what I just outlined, where you could sell for 110%. Doesn't exist when interest rates are going up and a buyer's financing is changing and the numbers for the deal and the cap rates are evolving. So really, the buyer puts up a 10% deposit. The property's worth 100%, but potentially between contract signing and 1 or 2 or 3 months later, that building might be worth 85% or 81% of the original contract value. So now the buyer's in an interesting predicament where they put up 10%, the building has gone down in value, and do they consider just walking away from the deposit?
It's an issue.
Yeah,
it's an issue.
And I think
Don,
I think that's what we're stepping into. I think that's the market that we're going into, and that we're going to experience.
So
for
let's
the
talk
next
about
2
this.
quarters. I mean, that's what I'm seeing at least.
So we're in an environment now where
do?
buyers put up a deposit.
Correct.
And I'm using the number 10%, which on a $10 million deal or more is not insignificant.
It's also a big deposit.
But it's not always 10%. It could be less. And there's buyers that signed contracts, and now the whole market has changed, and they're basically saying that they don't want to throw more good money after bad. Like, they made a bad move by signing. Just kick the deal because the market has changed, and fight for the remaining amount of the deposit, and just not close on the deal because they're overpaying based on the rates at this point.
I mean, they could do that. I mean, we just don't see it ever happen. I mean, usually it goes into, they put a list pendants on the building, but I mean, I think that's the only necessary step to get out of a contract. You make some sort of deal where you get some of your deposit back, and you just walk away.
Well, these buyers aren't looking for, no one's looking for litigation, so I agree with what you're saying.
Exactly.
The issue here is it's going to result in an unhappy seller either taking a retrade or an unhappy buyer coming up with more cash than he originally anticipated for the deal.
And, look, as brokers, we want to get the success fee. We want the commission at the closing. So we're incentivized to get, our only incentive is to get to the closing table. And sellers, in most cases, especially in a declining market, they want to get to the closing table too, because if they don't, they're going to be left with a property that's worth a lot less.
A lot less, and I think in terms of the process, I mean, they're exhausted.
Yeah.
I mean, we put them, anytime we put our client through the process, I mean, when they get to the closing table, they are spent. And
they want to sell. They want
to sell. They've made the commitment to sell. So
let's
them going
talk
back
this
on
through.
that, they don't want to do it either.
And a buyer knows that.
And a buyer knows that.
Let's talk this through. You have a $10 million to $30 million deal. You have anywhere from a 10%, 5% to 10% deposit. So it's not nothing, but the market pricing has changed. And you put a deal under contract, non-contingent, non-refundable, as is, where is, and the buyer can't get a rate lock on the financing. The Fed raises the Fed funds rate 75 basis points, in the middle of the contract period. Interest rates go from just saying 5.25% to 6% overnight. That's a reduction in loan value, somewhere in the neighborhood of like 10 to 15% less financing available, just based on that 75% basis point increase. And we have a deal under contract. So how do we get the buyer to perform? That's the point of this conversation. Number one is it's already under contract. Then we'll talk about pre-contract signing as well.
So deal's under contract?
Under contract.
Once you're under contract, your goose is kind of cooked. There's something that a broker or anyone can really do. The only person that could help is an aggressive attorney. So I think once you're under contract, I think you got to be speaking to your seller, keeping them afoot of what's going on, and you need to be pushing buyers to close, getting updates from buyers, figuring out where they stand. Do they have a commitment from a bank? Are they still searching for debts? I mean, all that stuff. I mean, you could figure it out. The issue is, even if you figure it out as a broker that you have some issues, what are you going to do? The buyers, think about a signed contract. Once you sign a contract as a broker and as a seller, you made your bet, and you have to line it.
Yeah.
So I think the real discussion is, what do you do, who do you decide to sell a building to, and how is that contract negotiated in today's market?
So I want to get to that. We'll get to that in a second. But I have a question here. It's not something we ever really talked about too much, but I had a theory about 7 or 8 years ago that there was a buyer in the market that raised a lot of cash. They had a lot of money developed to go buy properties.
Okay.
And I thought that they were taking bets in signing contracts, basically trying to get the lowest deposit they could, sign up contracts, and then basically, drag the seller through the mud, hold them over a barrel, retrade them on price, just make their lives miserable prior to closing. And they were willing to risk losing some deposits in order to over the entire portfolio of deals they were buying in order to get that much better pricing across the entire package of deals. Because if they're buying, 20, 30 buildings and they forego their deposit on, some percentage of them, it's like a cost of their business plan.
Yep.
And on the others, they're able to get 10 to 20% price reductions. So there's a market value, which is basically what they're paying, and they're getting a discount to market of 10 to 20% by basically just having this aggressive business plan. Is this something that we've ever seen? I mean, this was a theory of mine. I can't say this buyer actually did that, but is this something that's out there?
I mean, I think they're definitely out there. There's always buyers like that. I mean, you're always going to experience that throughout your years of being a broker. It's a good bet on the buyer's part sometimes. I mean, you win some, you lose some, and then you look at the spread of what you've bought over those 2 years, and the 40 buildings that you bought, and look at the spread. You did pretty well for yourself. Maybe you took some losses, but
you ruin your reputation in the market.
You definitely ruin your reputation, and then also that's what's going to affect you in this market moving forward. Because I think the only way you're getting a contract and a broker is going to really go to bat for you is your track record and who you are as a buyer and how you perform. I think that's the market we're going into. So to talk about what you guys wanted to talk about in terms of what buyer do you go with? I think moving forward, it's all going to be about a buyer's track record, how they've performed in the past, and if there's even a question of them not performing, I think brokers are going to be hesitant to do the deal with you.
It's a good point because brokers are constantly communicating with their clients in terms of their experience with buyers.
100%. And other brokers are talking to other brokers about their experiences, and it could deter.
It's an extremely small world.
Extremely small world. Buyers know that.
Of the 100 buildings we sell in a year, obviously the 20 brokers in our office communicate about our experiences with different buyers. This guy was great. This guy was, awful to deal with.
Yeah.
And then we speak with our colleagues in the industry, and we trade tales. And that we sell 100 properties, but between the brokers in this office and the relationships they have with other brokers, we have access to 500 to 1,000 deals that happen per year, and we hear the stories about who's who and how they act. And so you think we're going into an environment where it's not even so much about the price and the offer as much as the buyer's profile in terms of having integrity, doing what they say they're going to do.
In terms of getting to the closing table, I think that's going to be the only thing that matters. I think you need to ignore price for the time being in the future, I would say these next 2 quarters, and really look at a buyer's body of work and see in those past experiences and do your own DD on the buyer and understand who this buyer is. Does he actually do what he says he's going to do? And I think that means everything. And I think that's going to hold a lot of water moving forward with a lot of the sellers that you speak to. You obviously have to coach your sellers, and you have to tell them what's going on in the market and explain to them, look, this is the environment that we're in. So expect the unexpected because we don't know what's going to happen. Interest rates could rise another 75 basis points. You just don't know, and neither do the buyers, right? You don't know. CPI index came out today, and it's higher than it's not as high as expectations. So all this stuff plays an effect.
So, all right, so you're marketing a listing, you're getting offers from a bunch of different buyers. You go to present the offers to the client. One offer is $1 million higher than another, and the buyer that's $1 million higher, they own properties, they've closed on stuff, but you've heard bad things, you don't have a good feeling, or we've had a bad experience, and you have a different buyer for $1 million less who's like golden, does what they say they're going to do, closes deals, performs, has the financing in place. You go to your client, and your client's like, guys, it's $1 million more. And you're like, well, go with the guy that's less. You'll get to the closing table. And the seller says, guys, I have an attorney to protect me and represent my interest. Don't worry about that. I'm good. How do you handle that?
So, I mean, I'll jump in quickly. I mean, I don't love the example. I get the example. $1 million obviously is a large amount of money.
Okay.
And I don't think you're going to, I think there's other situations like.
So outline what
I'll
the
give you
situation would be.
I'm going through it right now, pretty much.
$1 million?
No, it's not.
Not
I've never
much.
seen $1 million. And I don't expect anyone to make that decision.
That's not true. Adam just had a deal where it was $1 million.
Okay.
Well,
Okay.
I have a
I
real
had one that
example
was
that we
50,000, so it's a
Well,
little
hold
bit
on.
different.
So what I was trying to say,
Yeah.
$1 million, whatever it is, you could say it's the same offer, maybe a little bit less. It's a conversation you have to have. You can never push a seller to do anything, but you give them your 2 cents and say, hey, I've closed with both of these guys, these groups. This is my thoughts. This is who I think you should go with for these reasons. But at the end of the day, right now, I think it's more terms in a contract over a price. I feel like if you're going to sign a contract with somebody, and this is what I would tell a seller, if they're going to make a decision and they're going to say, I want to go with the higher price, I know you're telling me this buyer's been flaky and not closing, but it's a lot of money, I have an attorney, I think, and we're about to have this conversation on a deal in an hour.
What's the price difference?
The price difference is very nominal. It's not a price difference.
How much?
Like $200,000. But it doesn't matter what the price is. The point is we're gonna have that talk with the seller, and they're gonna want to go with the higher offer. And I'm gonna have a conversation with the seller and the seller's attorney, because term, if you can get to term, someone that's gonna play games is gonna back off. There's terms you put in contract. If you don't think that this person's gonna sign or close, a big deposit, I think
let's talk about that.
10% deposit, a definitive closing date, a TOE closing date, an as-is deal.
Explain TOE.
TOE, time of the essence, means the date that's in the contract is the date they have to close. If they don't, they can actually lose their deposit. There's a real case there, and have a real deposit. The smaller the deposit, the easier a buyer will walk away. So you push them hard on a big deposit, and you push them hard on term, and that is how you go with someone that you feel might not close.
What other clauses, what other terms in a contract do we need to be on the lookout for, which could present issues for sellers?
Representations.
Such as?
So a representation is a good way for a buyer to retrade. They have a good attorney. They slide in some nice reps that and they get the seller unknowingly to make representations that they can't honor, and that is a landmine for a retrade. So someone will say, "Oh, you rep this. I need $200,000 off the price." So representations are big. Long closing dates without TOE, someone can drag that out.
Do you think
and
buyers?
a small deposit. That's how
do you think buyers are gaming like reps that they're trying to slide
Yes,
into deals?
all day.
I'll give you an example. For example, like maybe they want the seller to rep that there's no open permits on the deal, and the seller thinks that there's no open permits, but there happens to be an open electrical application or an open LAA kind of buried in DOB, and the buyer knows that, and now the buyer got the seller to rep that there's no open permits, and now they're going to just kick him down the road and be like, hey, Mr. Seller, Mrs. Seller, you had an open LAA for a boiler conversion from 7 years ago, and I'm not going to close, or give me this retrade. So how do you protect against that?
There's good attorneys, and that's one thing we tell our sellers. A lot of sellers might have attorneys in mind. The bottom line, when you're dealing with these buyers in New York, they are pros. Their attorneys are pros. If you don't match a pro with a pro, you're gonna lose, and they're gonna get a rep in past you. I mean, an example is we sold a building this year in Manhattan. I remember it, and the buyer obviously had a very good attorney. He's buying a building in Manhattan. The seller was more mom and popish, had an attorney they used forever, and they were negotiating a contract. The buyer ran title, realized there was some gray area on the title, knew that they couldn't deliver clean title, but they knew they could get around it with some legwork. They got the seller to represent clean title, which is a very common rep in a contract, but they knew that they didn't have clean title. So the seller's attorney should have said, okay, let's rep this, but let's run title and make sure. Boom, retrade, $300,000-$400,000.
Yeah.
They took it.
And dragged out the closing.
Yep.
What was the title issue?
I don't remember.
Yeah.
Donald, do you remember?
I don't remember, but there was a fire in the building. If I'm thinking of the right building.
Yeah, you are.
And
You're thinking of the right
There was
deal.
fines or fees or something?
Yeah, there was
That's
a
an
fire.
example. Like these guys just have very good attorneys, and that's a large rep. That's actually a rep that has merit. Obviously, you're not going to close on a deal that doesn't have clean title. But there's such smaller reps. Was there any overcharge complaints in the building historically? Was there ever a rent overcharge case? Did you ever are you representing that every unit here is free market? A lot of mom and pops will think, yeah, this building's free market. I destabilized it. And then the buyer digs in and they're like, oh, well, a unit 2B and 2C or 2D, whatever it is, show me the proof of improvements. Show me the leases. Show me the historical leases when they turned over. And the seller's not going to have it, or they might not have it, and then boom, retrade.
So, all right. So it sounds like the broker is in a position to know a lot more potentially than the attorney, especially if it's like a mom and
100%.
pop attorney. And do the brokers and the attorneys, the sellers' attorneys, work collaboratively, like hand in hand, or I've had experiences where the attorney thinks that they know it all and basically say, hey, broker, like, bug off.
Well, that you bring up a good point. That's why, and I agree. A lot of attorneys don't want to deal with brokers. You're not, as a broker, you're not privy to the contract. You're not privy to the negotiations. So you don't know. But as a broker, we like to put in our own attorneys, not because we're trying to represent the seller, not because we're trying to get our friend hired or someone that we know hired or have some influence on the deal. We want to work with someone that will actually respect our positions and reach out to us. That way we can protect the seller's positions and understand if the buyer is trying to get in. Because the buyer's not going to say, hey, by the way, broker, I'm slipping this in.
Yeah, a buyer's going to need reps.
Yeah.
But at the same time, we want to give them as few reps as possible.
100%.
And we don't want them using those to retrade.
Right, but at the end of the day, when you say we slot in our attorneys, it's not actually valid. The reality is we recommend attorneys that we've worked with in the past, and oftentimes seller's attorneys versus a buyer's attorney, it's like Mike Tyson versus an amateur boxer in the ring. The seller's attorneys for the mom and pops are way outgunned versus the professional attorneys that are transaction-based attorneys. So when we represent our clients, and we've done X amount of transactions, I look at wow, this guy has bought 50 buildings the last 3 years. Who's his attorney? Okay, this guy's great. We did one or two deals with him. He was excellent in the contract. It was easy to deal with, and that's who we recommend our sellers to work with because that he's a high-powered attorney, and the contractual process is a lot easier.
And a lot of sellers too, they're a lot of sellers that own one or two buildings, they look at an attorney as an expense. They want that expense as low as possible. So they try to spend $5,000 or less or $7,000. And the guy that's buying the building that has raised capital and that has a lot of investor money, he's got the attorney on Park Avenue that's 15, 20 grand. It's just gonna from Mike Tyson references, bite the other guy's ear off. And it's true. He's gonna bite his ear off.
So a lot of it comes down to this in terms of getting to the closing table. So a lot of it comes down to just the seller having the right attorney.
Boom.
And the attorney being able to move expeditiously and there's the whole market, there's the momentum to the deal.
Yep.
So you got to be able to move quickly, figure out if a buyer is going to sign it or not, make sure you're continuing to market the property and have other buyers and other offers at the table.
Yes.
It's all about just representing the seller's best interest to put them in the best position possible. And eliminate any of these potential issues if you can foresee them.
I do agree with that, but I'd say 9 times out of 10, obviously we negotiate very heavily on terms, but 9 out of 10 sellers, they just care about the price.
They do.
And the truth is, we had a deal that was $4 million deal that we had an offer, basically $4 million, and the next highest offer was a few $100,000 less. And I told the seller, I was you should go with the lower offer. Because we've closed with this guy, he has a great reputation in the market, X, and X. Here's his track record, and then you have this other buyer who's higher, where there's definitely some questionable terms in the contract that I wasn't privy to. That I saw after the seller told me he signed it. and the seller's attorney reached out to me 2 weeks after they signed it to be like, oh, it's signed. And basically I told them, I was like, listen, even though it's a $400,000 difference, like you should really go with this guy. And there's a lot of reps in the contract. The whole thing's contingent on a lot of very complicated type of deal.
Yeah.
And the guy, like, he's not going to end up, hopefully he does, but I don't think he's going to end up closing at the contractual price.
So you would recommend the lower offer?
Yeah, I did. But I also think most sellers, they don't really care. They think it's okay. Worst case scenario, goes out of contract and they resell it, but there's market timing risks with that.
Well, they think that their attorney has it covered.
Right.
They don't think a seller that's not in the game, they don't understand the fact that someone's not going to abide by the contract. They don't understand that. But there's so much stuff that someone could put into a real estate contract. You have to be so careful.
100%.
That's what
all it takes is one sentence.
That's what I'm super anal about in today's market. I feel like terms are everything, and you got to make sure it's a clean, easy, as-is deal. Big deposit, good, a stable closing time frame where it's ironed out in a contract, and that's how you do it.
Well, and also like user network. I think one of the biggest
For sure.
advantages of our company is the collaboration amongst the brokers. So, we did a handful of deals probably like 2 years ago with a pretty active like syndication group, raise capital, and they get an accepted offer, and then 2 or 3 weeks later they would already retrade on what their deposit was going to be and do multi-tiered deposits. And after we had done one contract with this buyer, like we already knew what was going to happen, but we also knew that they would perform, but they also just didn't want a huge amount of cash on the street while they're in contract. So in that instance, like, hey, like this guy has a great profile, they have a great reputation. These are some things that we know that they're probably going to do, which is fine because we've experienced it in the past and they do perform very well. And in that instance, you tell your seller, like, hey, like we still would recommend going forward just because you understand who they are and what their profile is. But I think knowing other brokers in the market and talking to other people about their experience with certain groups, especially if no one in our office has done a deal with them, that's very helpful as well.
Another thing I throw in, and I'm going to go to Donnie on this, but we're hearing about seller reps a lot too now. Like a seller really needs to listen to their broker because we've obviously been through this hundreds of times. But a good one now is vacancies, right? A seller says, you know what? And a buyer says, I'll buy it at X price. I need 5 out of 6 vacant or 7 out of 8 vacant. And the seller's like, I can get those 2 people out. I'm going to do it. Even though we're like, hey, it's a serious rep, right? If you don't get this done, you are kind of toast. And we're seeing it happen. And I'll let Donnie go into it a little bit, but we're seeing it, right?
Yeah, I mean, it's just it's very risky at the end of the
Yeah.
day. You're dealing with another human being, so you're never going to know what their answer is until you actually finally ask the question. And we're having difficulties.
Well, it's not only that. Like, we in Brownstone, Brooklyn, for example, like the 3 to 4 unit conversion type play has been very popular in the last 2 or so years. And I'd say 70-80% of listings had tenants in the building before we took the listing. The sellers were like, oh, I've had a great relationship with my tenants.
Yeah.
Like, I've been very fair to them. I don't charge them a lot of money.
Yeah.
Blah, blah, blah. They'll definitely leave, right? And, we've experienced many times when the seller actually can't get the tenants out. A good example recently was, the tenant expired lease, 3 of the tenants left for like no money, and then you had this one holdover tenant on a month-to-month lease, an expired lease. He was in arrears, so the guy wasn't even paying rent, and he was demanding like a $70,000 buyout from the owner to leave.
Yeah.
And the seller ended up paying him like $60,000 to leave a free market apartment, and the guy was planning to move out of the state anyway because he lost his job apparently.
He had some leverage.
He had leverage, but the truth is the seller reps are really important.
Yeah.
And anytime someone's like, I can get it vacant, I'm like, okay.
Well, what you're talking about now is contingencies. I mean, you're basically entering into a contingent contract where the seller's representing that he'll deliver something that is related to a third party that the seller may or may not be able to uphold. So you have a soft, we talk about non-contingent contracts where there's no outs for either party. And this is a major out if the tenant doesn't want to leave.
But is it, or is it just a major retrade and the buyers know that?
It could be a major retrade. What if it's in an inclining market where the seller represents he's going to have the tenant out, and all of a sudden the seller realizes the property value just shot up, especially for the vacancies, and basically tells the buyer, hey man, sorry, can't get the guy out, and like uses that so that the buyer can't get to the closing
So now
table.
you're getting.
I mean, that's obviously a flip scenario.
That's not happening right now.
Correct, but that was
I
happening
understand
last
that.
year.
But that's the thing with 100% it was, and that's the thing with reps. Obviously, we know this on a few deals now. A lot of sellers that don't do this every day, like we do, they don't really understand how serious these reps are. They're like, oh well, I have an attorney, and if the buyer throws in some reps, my attorney will deal with it, and I'll deal with it. Or hey, I'll rep that, I'll get it vacant, and then when they don't get it vacant, you're gonna get a call that like one that we got pretty recently. Oh, I can't get this person out. Can you call the buyer and let them know, and we have to change the deal? You signed a contract representing it. Like, it's serious. Like you have to do it.
Yeah, like one of the more notable stories of that. It was in Park Slope off Prospect Park, and there's like a pretty sizable like nursing home that the seller was gonna rep.
Yeah,
they get the whole thing vacant, and the buyer, very sophisticated, smart guy, ended up going to contract, and it took him years. The seller in an inclining market where even day one was probably a good deal, but by the time the seller got the whole thing vacant, it was like
a screamer.
Albert Pujols hitting 700 home runs, like an absolute screamer of a deal, and the buyer hit an absolute home run because he having the insight in the market and understanding what to put in a contract and what not to gives you leverage, and especially if you're the best in the game from a buyer and a buyer's attorney's perspective. Representing the sellers, they need that same sort of representation. Otherwise, they end up getting
100%.
renegotiated. Yeah.
So I want to put a different scenario out there. So you have a deal, it's under contract, non-contingent. The buyer thought he was going to get 75% LTV or whatever. Now he's getting 55% LTV, and he just doesn't have the money. And he's basically like, guys, like,
So-
I'm out, or something has to happen. Like
Something has to give.
Seller has to give me something, whether it's like vacant units, better price.
So listen,
Like I need something, because otherwise I'm not closing on that deal.
it goes both ways. Obviously,
What do you do?
I mean, listen, I don't have the money. They probably do, but obviously, listen, things change that are serious, and maybe there's some adjustments that need to be made. But also, as brokers, we need to be bodyguards for the seller. Like we need to understand that every broker that's hired is representing the seller, and this buyer signed a contract, and we need to push them to close. Obviously, if things have changed and we have that discussion and the seller agrees, and adjustments can be made. But I think a big part of our job today is being a bodyguard for deals that are under contract when the rates were lower. And it's true.
Well, I think also like if the buyer wants to if the buyer wants to save face at our company, it continuously wants to get deal flow.
Yeah.
They don't retrade.
They don't retrade.
They will take it on the chin like a champ, and they'll close because they understand if they put me through a very unscrupulous or if they come in and retrade my client, like that's the last deal they're going to see from it.
And they always try. Like they try to scare the broker, being like, "We'll give the deposit back," or "We're going to give half it back." And like, is it a real threat? It could be, but we got to protect against that. You gotta be careful on who you go into contract with.
But that's also like working in lockstep with the seller's attorney throughout the process. But to what Derek said earlier, oftentimes the seller's attorney, they don't even want to work with you. Those are the craziest deals. Yeah.
So like you're playing poker with the buyer,
are.
basically the buyer's basically saying, this is my hand, this is what I'm going to do. And the question is, do you call their bluff, or do you fold into them and like give them
situational.
something? It's situational.
100% it is. I mean, it depends what the deal is, who the buyer is, what he knows about the seller. He can know some bad things about the seller, like there's a loan coming due, or the seller really wants to sell, or the seller's
Or
really,
the market is down
or the
X
seller's
percent.
really rich and probably doesn't care about $1 or $2 million on a $40 million deal. Like if a buyer gets the whiff of something like that, it's a bad negotiating tool. So you just need to really represent the seller well and push. And again, if it's serious,
So it's not only negotiation prior to contract signing, it can be further negotiation prior to getting to the closing
But
table.
on the flip side, we did have some pretty serious things happen in the last few months, right? You had interest rates skyrocket, which on a big deal really matters.
Yeah.
On a smaller deal,
Really
it still matters, but not as much. And you also have the DHCR rewriting some law that is also very bad, and it could really influence someone buying a deal. So there's some things that do have validity.
100%.
No one likes retrading, but it's one thing if you're retrading because you're just being a retrader and you're trying to save some coin, or if you're like, there's new law, there's new factors here, it's not even close to the same deal that I locked up, we need to talk. And then you talk. But it's really up to your seller.
Yeah. I mean, I think it's like knowledge is power. I think as a broker, the more knowledgeable you are, the more that you could tell your client what's about to happen, forecast what's going to happen. So they're a little bit more knowledgeable of what's going to happen going into the contract, right? I think it's on the buyer's point of view. I think it's very hard to buy a deal right now. I think it's extremely hard when you look at you underwrite a deal day one, and then by day 30, it's a completely different looking deal, and you just don't know where you stand on it.
100%.
So I get where they're coming from. A lot of things have just happened that completely have changed this market.
But buyers are also getting better pricing now, and it might be harder to buy deals, but that also presents the opportunity as well. Like, this could be one of the best buying opportunities that we've seen over the past 10 years.
It could be, but if you're buying,
go ahead.
if you're buying a deal at a 5 cap, and then you're in contract and you're negotiating a contract and you're about to sign the contract, and now you're negatively levered on that deal, how does that, like, how do you do that? How does that work?
Well, it depends on the deal.
I know, but I'm just saying on a regular cash flowing deal.
I mean, you're negotiating a 5 cap. It depends what your projection is on the deal. But
I'm just using an example.
But the truth is, I mean, cap rates are probably higher today than I've seen in my 15-year career.
Yeah.
Which is fascinating.
But I'm just saying, like, they don't have ground to stand on. Like, it's always changing. Every single month that goes by, interest rates go up, and obviously things just change.
People need to anticipate that too, though. It's the thing.
I think so too.
The interest rates, have they gone up a lot? Yes, but everyone was anticipating them going up. The rate locking is an issue. Like, if you thought you had a deal that was going to rate lock, or that bank typically rate locks at LOI, which there was banks that I heard about that historically rate locked at LOI, and then the rate shot up on the last raise, and they're like, not rate locking. And it threw buyers for a loop.
Look, I kind of take a different view on this.
Yeah.
I feel like the buyer signed a contract. Like, it's not a cap rate deal. I know that we talk about
some deals are.
Well, hang on, they are, but I don't think real estate is cap rate driven. Of course it is, but the truth is the cap rate, 5 cap, 5.5, 6, the cap rate goes up, the cap rate goes down. The cap rate is almost irrelevant. These guys are getting a cost basis play in a piece of real estate in New York City. So regardless of how much the rates change or how much the bank retrades them, they agreed to buy at a certain cost basis, and that's what they did. And everyone knows interest rates are going up. This has been going on for a long time. So I agree with Luke in terms of, like, being able to forecast that and see where the rates are going. And as a buyer, you want to buy for cost basis because you like the deal for the long run. You think you can grow with it over a 5 to 10 plus year hold. So in that regard, the amount of financing they get, or if they have a 5 cap and they're negatively leveraged, they shouldn't sign the contract.
And for the listeners, what is cost basis so they understand that?
Cost basis is just your cost basis in a deal. It's like the price per foot. It's how much you pay for the real estate.
Right.
There's certain asset classes where you could pay $100 a foot in New York City. There's other asset classes that are $1,000 a foot. But you could buy a property that ultimately will be worth $1,000 or more per foot, but you can get it for $600, $700 a foot, and maybe it needs a little bit of value add. But these types of properties, there's a direction and a play for where they can grow with it. And like, your bank financing is not permanent; it's a temporary, cost of capital, and so is your cap rate.
That's true, but if someone allocates a certain amount of capital for a deal, and interest rates change, and you have to come up with $2-3 million more, that changes someone's ability to close. And yes, I hear you on cap rates. I hear you on cost basis.
Yep.
But you still have to show up on the day with the money. And if things change, you need more of it. Yeah. So I honestly think when you're selling these deals today, like I said earlier, term is big and buyer profile is big, because a lot of these syndicators.
What do you mean term?
Term, like terms in a deal. Like when you're selling a deal, like what's the deposit? What am I closing? That's term. And a lot of the money that was buying deals 4 months ago, today, a few months ago, whatever it is, these guys have raised capital. That means that, yes, they're buying a deal, but they are an operator. And if the people that are backing them, that are investing into their funds, are listening to the news and getting scared, like, if they lose them, they are not the same person anymore. They could have been very strong 6 months ago, or 4 months ago, or even 1 month ago. But if their investors turn a little bit, they're all of a sudden weak because they are their investors.
Well, it's the private families and
that's what it's going back to.
That is who is about to emerge. Yep. But I also think those are the people that are about to sell.
No, I agree with the first part you said.
I'll tell you why I think they're going to sell.
Who's going to sell?
some of the long-term owners that have a lot of real estate, and the only reason I'm saying that is because potential diversification outside of New York and higher yield in other markets.
That's been going on for
But
years.
I'm saying
2 years.
those are the people who are going to start buying who probably haven't been buying recently. And I also think you're going to see these like sort of dinosaur type of owners that have 30, 50 buildings.
Yeah, because
Start selling a handful of them.
no, buying.
Buying.
I think
I'll
it's
tell you,
both.
It's buying all day. Listen, when interest rates go up, that's opportunity, and the real buyers that have a ton of money, they're going to pounce because the higher the interest rate, the better yield, and you know
Cost
what?
basis.
Cost basis and yield, and you know what? Interest rates will come down eventually, and those deals will look very good. However, when you're raising a bunch of money and interest rates are really high and the stock market is shitting the bed, you're probably not investing. So those syndicators probably aren't buying, which is a problem because they can't pounce on the opportunities.
I
They're
couldn't agree
scared.
more.
Yeah.
Higher interest rates, higher cost of capital makes it more difficult to close deals. Buyers are going to pounce on the lower price per unit, the lower price per foot, the cheaper cost basis. Those deals look much more favorable.
Oh, yeah.
They're not so sensitive to a quarter point increase in cost of financing or cap rate. They're not. Some of these guys don't even talk about cap rate or debt coverage ratio or IRR or cash on cash. They talk about price per unit and GRM.
The biggest bosses don't even talk about financing because they don't care about financing. They're like, great, interest rates are 10, great, I'm all cash. I'm gonna buy this thing at an 8 cap.
They talk about I'm gonna pay 7 times, 8
Yeah.
times the rent roll.
Yeah, cash.
They say you syndicators are paying 15 times. I'm buying here at 8 times, and I've got the cash, and I'm gonna close.
I agree with what you said the first time, Adam. I think not yet. First quarter of next year, towards the end of this year, we're waiting for another hike. There's going to be buyers that you haven't talked to in years looking to buy deals.
No, I agree with you on that for
Years.
sure. I was just saying, due to the political risk of New York and just some of the changes, I think some of those guys will take some chips off the table to diversify their portfolio
I
a bit.
agree, but they've been doing that since 2019, 2020. There's people they've been doing that. It's a buy. It's time to buy. It is
So-
time to buy, not sell.
All right. So, is there more that you guys want to talk about in terms of getting to the closing table?
I think we brought up a lot of good points. I don't really have anything else to add. I think people get it. I think we have a.
Yep, I agree.
think as brokers we have our work cut out for us today, and we got to make sure our sellers are going under contract with the right buyers, and we got to be able to push buyers and push term and know what we're doing.
I would just the last thing I'd like to point out,
Hire
like,
good brokers. Very important.
I'm doing a
Yeah.
lot. I'm doing a lot more due diligence before I take a listing at this point too. Now, so
point.
I'm asking for like rent collection reports. I'm looking for arrears reports. I'm like trying to just quickly glance through leases, making sure everything actually lines up because I'd rather just get in front of it versus deal with it in 6 months from now when it's a much bigger headache.
It's just brutal. Spin your wheels and show properties and get buyers through and field offers only to like have like something you easily could have uncovered if you just thought about it and not waste your time and spin your wheels on that.
100%. No, but I think
Donnie, anything else before we wrap?
No,
All right.
no, all good.
Derek, good.
Yeah, no, good.
So that was a good discussion.
That's it for me.
All right, good.
So, all right.
On to
Thanks,
next-
guys.
Yep,
And
next
we'll
week.
we'll see you again soon.